Right, so only one person answered the question. I did put a question in the chat about what discretionary trading is. I see it as not sticking to hard and fast rules like a trading program, but using your discretion to decide based on the evidence at hand whether to buy, sell, or wait for more information. Yeah, I think that's a good answer. We're going to kind of firm up. So the point of this session is a group therapy session, which means it's more interactive. It's not me with something heavily pre-prepared. And the idea is that we look after this, look through this subject together. And what we're going to talk about is discretionary trading rules, or what is a set of trading rules if you're a discretionary trader. Because I think the overriding opinion seems to be that having a discretionary approach is very much like shooting from the hip, trading from the hip. And that's not my experience. So it's not really well defined. I mean, there's nowhere that you can go and get a really good definition of what does a discretionary trading rule set look like. So what we're going to do today is cover that. But first, there's kind of a related topic that we need to consider, and that is the actual process of becoming a discretionary trader and treating trading as a skill and actually using your brain and and how you actually get through this decision-making process as a discretionary trader. So the first thing we're going to consider, and this will make sense later on, is the human brain, which, if any of you have actually looked at this in any detail, it's mind-boggling what the mind does. First of all, it's very, very hungry. So you use about 6 calories per pound of muscle a day, and the brain's about 100 calories per pound. So it's like about 15 times more more energy consumption, the brain versus muscle. There's 100 billion neurons, each of which can contact with hundreds or tens of thousands, I think it's 40,000 other neurons via synapses. And there's as many neurons as stars in the Milky Way. It's more advanced, it's more efficient, has more raw computational power than the biggest supercomputers. There is actually one supercomputer called Spinnaker, and what it was built to do, it was built to simulate the way the brain works. It's like an ongoing project. It's like a never-ending project. But as of 2018, they had 1,200 connected circuit boards and 1 million core processors, right? And with that 1 million processors, it's able to mimic the function of a mouse brain, which is 1,000 times smaller than a human brain. So with those 1 million CPUs, it's approaching almost 1% of the scale of the human brain. And that kind of thing boggles my mind, right? The other thing that boggles my mind is we don't actually know how it works. And there are some people that say it is actually too complex for us to understand how it works. In other words, you'd need to have a more advanced brain than our brain to understand the brain. Okay, I don't know how that works. And it's just one of those things that people don't really think about. And people don't try and leverage some of the features it comes with. It actually comes with a bunch of built-in software that we use every day for certain things. And from a trading perspective, we tend not to use those things, or we tend not to try and leverage the things it does. Now, here's a mind-boggling problem. And I always think this is great. Examples like this are great. So how about you do this? So within 1 second, we've got to solve this problem. So the first thing is, we're going to have a ball fired in our direction from 60 feet away, traveling between 60 and 146 miles an hour, right? The ball's aimed at an area in front of you that is 21 feet by 13 feet wide. So it's going to hit that area and then it's going to bounce. As the ball moves towards you after bouncing, you're going to have to do the following, right? You're going to have to predict the location of the bounce. So you can also predict where the ball will be about 2 to 6 feet off the ground after it bounces. You're going to have to position your body just behind that location, slightly to the right as you face it, with your outstretched arm 24 inches from the location the ball will pass. Then you've got to swing your arm forward so that flat surface you're holding makes contact with the ball at a speed and angle for it to pass over a 3.5 foot obstacle 15 feet away and land in an area 39 feet by 40.5 feet beyond that obstacle. And you've got to make adjustments to the angle and speed calculations according to the position of the ball that's coming towards you, but you've also got to do it according to something that's 60 feet away and is moving around as the ball moves your way. Now, obviously, this is tennis, right? But this is everything you do when you're playing tennis, right? You're actually watching that ball come to you, seeing the guy hit the ball, you're watching that ball come to you, and at the same time you're watching that ball come to you and you're getting ready to hit it back, you're also watching the other guy or woman on the other side of the court to figure out where they're going to be, right? Now, you could give me 12 months and I would not be able to do the calculations. I don't know enough about physics, I don't know enough about math to solve this issue ever, right? And it's not that it would take me a long time, it's just I could not do it. I do not have the skills to constantly do that. But I do know that my brain can do it because I play tennis and somehow all of these calculations get made. I end up in the right place, my arm and the racket are at the right angle, the speed I hit it with sends it where I want it to go. And mostly, my eyes are focused on the ball, but in the background, I'm also looking at my opponent or opponents, and I'm not actually moving my eyes from the ball to the opponent, I'm actually taking it all in, all at the same time. And I'm not even looking at where my hand is, right? Because we've got this skill called proprioception or kinesthesia, or basically otherwise known as knowing exactly where your hands are without actually seeing them. Now, if that doesn't blow you away totally, knowing that your brain is doing all of this behind the scenes, it is calculating all of this stuff, then you're obviously not very easily impressed. Now, so we know the brain can do this. We know it can't do it the first time you play tennis, right? So the first time you go on a tennis court, you're useless. But the more you repeat it, the more efficient your brain becomes at doing it. So we know that our brain can do some like crazy things, but we know we also have to train it, right? So we also know it appears that we need to experience something to train the brain. So you can't read a manual on driving and then drive, right? You can't read whether it's a tractor or a motorbike or a car. You cannot read how to do it and then do it. You only learn through experience, right? Would everybody agree that this is true? Or do you think I've already gone left field? And okay, so at least we've got one guy who agrees with me, right? So we know the brain can do this, right? Very, very smart. But and the key thing here is we know that it learns through experience. It gets better at stuff, right? Now, in terms of the brain, right, we've got kind of two parts of the brain, the two main parts. We're going to leave off the kind of lizard brain that we've talked about before, downshifting and all that stuff. We've done it in webinars. We do know that there's a part of your brain that can take over like a flight or fight response and turn you into a bumbling idiot. But the two main parts of the brain we're going to talk to in terms of skill development are the conscious mind and the subconscious mind. So the conscious mind is what most of us think of as us, right? We all think about, when we're thinking day to day, you're driving in the car, you're thinking that guy's an effing idiot, right? Because he's cut you up. That's kind of like your conscious mind. It's the bit that's, you kind of talk in your head to yourself. You talk things through in your head. That encompasses everything that you're actively and purposely thinking about. Now, the subconscious mind does a lot more. There's lots of stuff you don't even think about. You don't think about your heart beating. You don't think about breathing. Driving. Driving's such a great example of this, because when you learn to drive, you start driving with your conscious mind. And it's a lot to do because your conscious mind's not that good at multitasking. So you're trying to juggle the gas, the brake, the steering, the gear changes. And it feels like you're trying to juggle 100 balls, right? And then 3 months later, you'll be driving down the road, picking your nose, drinking a coffee, chatting on the phone, following the GPS, shouting at idiots on the road, all while steering with your knee because you're sending a text message. None of that requires any conscious thought, right? You're doing it, but you're not thinking about it, right? So as traders, we should accept that this part of us works and it works in a certain way and we become subconsciously good at stuff, right? So most people think that kind of conscious mind, that's that person who thinks out loud in their head, They think that's the person making the decisions. But, you can go and look at it. There are experiments that ask a person to make a choice, and they put all these wires on your head. And they say to you, pick a number between 1 and 10, pick a name or something like that. And what they can see is the subconscious mind engages and actually makes that decision about 100 milliseconds before the person consciously makes up their mind, right? So the subconscious is driving to a much larger extent than we actually presume, right? Now, if you don't know if that's nonsense or not, because when I heard that, I'm thinking, well, that's weird. So when somebody asks me to pick a number between 1 and 10, actually what's happened is my subconscious picks a number and delivers it to me, and I think that I'm picking it, right? And it's like, well, that's a bit strange. So if we're not sure if that's nonsense or not, do a simple experiment. I don't need to type anything in. I just want you to think and observe the process. So I'm going to ask you a question. The question is, what is 5 plus 5? Right, give the slow ones a minute. Right, so for most people, not yet 55, brilliant. Steve, you don't have to type in the answer, right? I want you to think about, where did the answer come from? Right, where did it come from? When I said 5 plus 5, most of you instantly had the number 10 pop up in your head. But where did it come from? Did any of you consciously visualize 2 hands and count the fingers? Or was that answer automatically delivered to you from somewhere? Did anybody count it, or was it just delivered? Tell me if it was delivered. I think some of you are still working it out. I think Steve's still working it out, Steve Lee. Okay, so it was delivered to us, right? So basically that was a problem that came in, and you just know it. But I agree, Victor, you just know it, but where is it stored? So Victor comes with a good point. Victor says he just knows it, okay? But actually the answer still had to come from somewhere, right? And so even if you just knew it, it had to be retrieved from somewhere inside your head. So you didn't try and retrieve it, it just came. And it's just astounding, right? It's astounding. So if you take a step further than that, so you guys all just experienced your subconscious mind delivering an answer to a question without you working it out or telling it where to look, or waiting because there was low bandwidth or anything like that. Now, if you take that a step further, think of great thinkers from the past, people that pioneered brand new ideas like Louis Pasteur, Nikola Tesla, Albert Einstein, Marie Curie, Ronald McDonald. Where did their ideas come from? Right, Albert Einstein, did he consciously figure out E equals mc squared? Or did it just occur to him one day? Did his subconscious mind just deliver it? Right? I don't know the answer, but it's just it's kind of a mind-bending thing. Did their ideas come from the fact they had a better computer? Was that stuff just programmed into them from birth somehow? How did their subconscious minds make the leaps into brand new areas of thought? I just think it's amazing. Now, why this is important? Well, we've all got this great computer, but we rarely set it stuff to do intentionally, especially when it comes to trading. Now, I do have a little bit of experience with this because I've always worked, I've always done a lot of stuff with software, and with software it's normal to face a problem or a challenge where you just can't figure out the solution. You might have a couple of solutions on the table, but they're all really clunky and just yeah, and it just doesn't feel right. And so we'll often be on a call on the team, and we'll throw ideas around, and we're consciously trying to create a solution. And it's not unusual that we just, it just goes really quiet and just nobody can think about anything. And what we'll do is I'll just stop the meeting and say, look, we'll talk about it tomorrow. And regardless of how urgent it is as well, we'll say we'll talk about it tomorrow. And then what I will do personally is I will just forget about it. I'll stop thinking about it completely, right? I'll just forget about it, right? Then I'll go to sleep. Now, bear in mind that I am a geek, right? So I wrote my first computer program at 13. I had my first system go live when I was 16. I spent 14 years running a company for a major Japanese technology firm where we did a lot of research and development. So I've been through hundreds and hundreds of projects, and my brain is kind of trained to have problems in software and come up with solutions. So all these hundreds of projects have been focused on resolving a set of issues. many of which were doing things that had never been done before. So I'm pretty sure my subconscious mind has just been trained to solve issues of that nature. On the other hand, I can't draw, sing, can't build anything, I can barely kick a ball. Anything that requires physical dexterity, I am absolutely useless. I can run, I can do stuff like that, I can run, I can swim, but as soon as it comes to like kicking a ball, I'm pretty useless at tennis, to be honest. I'm useless at it. But anyway, what I do is I go to sleep knowing that my brain has received the problem and will be working on it. And it sounds like BS, but 9 times out of 10, the next morning, I'm going to have at least one, often a couple of workable solutions to the issue, and then so some of the other guys on the team will too. So my brain figures it out overnight. Now, I don't know if any of you have experienced that, or have, most people experience it by accident. Not so many people actually just say, well, Mark's saying he pulled it out of his, yes, we know what you say, Mark. But yeah, sleep on it. It's right, yeah, that's exactly, this is a term. Let's sleep on it, Stephen. That's exactly what it is. It's just we're thinking about it in more kind of hard and hard technical terms and what's really going on. But yeah, that whole term, let's sleep on it, takes on absolutely no meaning, right? Carl beat himself at chess. Well, your subconscious would probably beat you each time, Carl, wouldn't it? Yeah, sleeping on it. He's like, yeah, writer's block, James. James is writer. So he writes and sleeping on it always works, right? And it's really interesting. If I can get to the next slide. So, what has any of this got to do with trading? Well, if we look at the common errors with people trying to trade with a discretionary approach, and I'm seeing people that I've known for years, right? Because there are people that have been with Jigsaw since 2011, and I know a lot of the names. Some people, their names just tend to stick, probably because they bug me a lot. But I still see a lot of people reverting back to what I call a one-rule trading system. And like I say, I've been speaking with you for years, and you still come out with stuff like, I'm trying to fade absorption. And that on its own will never work, not in a million years. And basically what you're trying to do, it's a conscious mind technical approach to trading that ignores so many of the things you should take into account that you really should know better. At best, it's wishful thinking, if not, it's downright delusional. So when you come up with this idea that, well, I'm going to fade absorption, it's a single rule, right, in a complex market. You're not going to be able to boil it down to one rule, okay? And that is pure conscious mind thinking, right? Other people I see trading gut feel, right, which is really, you could argue, is the purest form of discretionary trading, okay? The problem with it is it's often irrational. It's often driven by fear of missing out more than anything else. It's also wildly inconsistent. It's not measurable. And it's also not consistent with the way that we train our subconscious, which is based on repetition, right? So if everything we've done, like driving, we went on a driving lesson, went on another driving lesson, went on another driving lesson. Now, the funny thing is, if you remember your driving lessons, you can be like pretty lousy on one driving lesson and you're still lousy at the end of that driving lesson. The next driving lesson, when you sit down, you're a little bit better. Something happened between each driving lesson that made you improve. You did not improve in the lesson itself. Now, that's my experience. So there is something about repetition. And if you're just trading pure gut, every setup's going to be different and you don't have that repetition. Then the other thing is, you don't have a feedback loop, right? Now, one of the things about trading is when you're in the heat of the moment, it's really difficult to sort out what you did right and what you did wrong. And part of your training your subconscious, certainly in prop firms, I mean, you've all heard of Joe at Axia having his first $100,000 day at 23 years old. Took him on at 18, didn't have, I think 18 or 19, they took him on, didn't have a didn't have a degree, but what he did, with his trading, he traded, he reviewed his trades, he traded, he reviewed his trades, and less than 1% of people are doing that. Mostly people just, it's like, you know what you have to do, but you just don't want to do it, right? And it's exhausting having that discussion with people that are going nowhere. People like kind of hear it, say, yeah, I'm sure that's a great thing to do, that reviews, but I'm not going to do that. I'm just going to click buy and sell and make no progress. So that feedback loop seems to be an important part, certainly for trading. I'm not sure what other disciplines it is, but it does seem to be one of the key parts. And it's also true that people don't really get what discretionary trading is. So it's a mix of kind of rules and flexibility to add nuance to your trading when you execute. So what's the right blend? How much like gut feel is beneficial? And we'll get to that in a minute. And then the next thing is, I mean, this is the hilarious thing. It's people shortcutting experience, right? So one of the funniest things is we've got this market making course that Gary put out, right? And I spent 2 days with Gary when I first met him. It's like years ago. And he said, Pete, I'll teach you this for free. And after 2 days, I'm like, Gary, this looks great, but I'm really fine with what I do already. And like, it looks great, but I don't want to spend the time on it, but I get it what you're doing. And I'm certainly happy to tell people that this is good. And so I completely trust Gary in terms of how he wants to teach this. So when we released this market making manual, Gary said, I do not want a trade room. I don't want any kind of discussion room about this. He said, because all it's going to be is the people in the trade room are going to be the people who have all the questions. He said, it's just going to be people with questions asking each other. And the other thing I did, I just left it completely up to him. So when questions come in to me about the course, I just send them to Gary. And Gary is absolutely brutal. Because the same bunch of questions come in and people send these long emails. And the emails will say things like, well, you've said, do I get a fast fill? And then they'll come up with it. You'll get this 1,000-word text that says, let's say I put a bid in at 1,025 and then, this happens and 3 seconds go by and then it moves this price to the offer and you read through this whole thing and it's like, wow, and it's really subjective the way you interpret this stuff. And Gary's reply to them is usually, you've been an idiot, just watch it. And then the next thing they'll do is they'll send another long email telling Gary that actually the way you should be teaching this is, and then they'll send him a long email of why you have to do this because that's the way I want to learn. And Gary's got an understanding of how people learn this, and he always says the same things. You've just got to watch it. Because basically with something like that, it's really focused on what's going on in the market, about all these different things. So when you've got like something, a question about value or a question about a fast fill, it's completely experiential. And some people don't want to get the experience. They don't want to pay for the experience, or they don't want to get the experience themselves. They want you to tell them the answer. But like learning to drive, it doesn't matter how many times you tell somebody how to drive, they've still got to get in the car and experience it. And even on my side, there's people that come new to Jigsaw and we give them the drills. And before they do the drills, they send me an email asking me, how should I do the drills and what should I be looking for? And it's like, well, the drills are actually there to make you see the things you should be looking for. So I can't really tell you. And even if I did tell you, you wouldn't really understand it anyway because you haven't watched it, so you couldn't relate to it. And it's just a really big thing so even when you say to people, please watch this and just go through this and you'll see what you should see, they don't want to do that. They want to say, well, I don't want to get that experience. You should teach me this way, rather than listen to the people who are trying to teach you that have taken a lot of people through it. So there's a big thing about trying to shortcut experience, right? Now, what are the discretionary elements? Right, so some of the big discretionary elements in trading are news. Not going to discuss it in detail because it's in the situational awareness webinar. Some of you are doing this half-heartedly, and it's key to have a feedback loop here. So it's not just enough to look at the news in the morning and then try and figure out, what's going on in this market, what's the news that's hitting the market, how am I expecting this market to react. You've got to close the loop at the end of the day and see how things really played out. So for most, when you're looking at the news and trying to figure out what the day is going to be like, it's not about predicting direction. It's just about predicting how volatile it's going to be. So like if tomorrow morning there was an announcement that there was 100% certain cure, not a vaccine, a cure for COVID, right? That would cure somebody in 2 hours, right? The market reaction would be, it'd be huge. It'd be very, very volatile, right? We would expect the market to react very positively to it. It might go up and down. And where it stops and where it starts, we don't know. But we know that should bring in some volatility, right? Same if Donald Trump, put out a tweet and said, I'm going to take the nuclear football to the park and have a kick around, right? We can expect, if that tweet came out, then the market's going to go batshit crazy, right? It's going to go crazy. It's going to tank, right? So a lot of you are kind of doing this thing, looking at the news at the start of the day, but you're not really honing that skill. And it really isn't that tough. It's just a matter of being more news aware. Now, if you've been trading the last 3 or 4 years, we know that Brexit was massive in terms of it was so ridiculous. Yeah, the market's already discounted that Trump tweet. Hey, Adrian. The market is so ridiculous with Brexit. I mean, it was stupid because every time there was a bit of news about Brexit, it was as if that was the final say-so. That was the final result. So you had the referendum was on, then it was off, then it was on, then it was off, then it was on. And every time there was a bit of news to one side or the other, the market was like, oh, that's what the final situation is, so we're going to do this. And it was just a great, that whole Brexit period was fantastic. When COVID ends, we're going to have some amazing news-driven days because everybody wants to pull out of China, right? The Europeans, the Italians are not happy at all about the way Europe's treated them. We've got at the moment a situation where the EU has said that there should be bonds issued, that there should be loaning countries like that money, but they've done it in such a way that the German Supreme Court has said, well, that's good, but we can't participate. So you've got the one biggest source of funds that can't participate, and that's going to cause some ups and downs. So all of this stuff is just about, what's the market reacting to? So we knew Brexit was a big one. It'll probably come back as well. Once COVID's died down, people will be looking to Brexit for their next dose of news-driven volatility. So the news environment is a massive discretionary element of trading, right? It's going to tell you which trades you should and shouldn't take, right? So if it's a real dead day because the FOMC is tomorrow and the market opens up and it's really slow, you're not going to take the same setups that you should on a nice day where we've got decent movement, right? The ones we used to call the day trader days, where it's just swinging up 10 points, down 10 points, up 10 points, that kind of nice, just day trader action. So news environment is a discretionary element because it's very difficult to say, I'm going to have a mechanical rule that says if Brexit on, then buy at this point after the market's gone up 10 points, right? It's discretionary, right? Recent activity, like that period we had last year, where we kept getting really good moves overnight and then nothing in the US session. It was very, very annoying, because I'd get up, I'd start looking at the markets. I mean, I'm here at the Asian session, but I don't trade it. So I'd start to look at the markets about 2 hours before the US Open. I'd see this massive massive overnight session. And I'd get really excited because, this could be a massive US session. The US session would open and go nowhere. We've got a return of liquidity right now. Right, so recent activities, we know we've been really volatile, but the liquidity is starting to return and the markets are starting to calm down a little. That's recent activity, right? We should take that into account. Lunchtime slowdowns, holiday slowdowns. It's all just basically helping to paint a picture of how the market might be trading. It's not going to be guaranteed how it's trading, but it's just to help. And then when it actually starts to trade, okay, how is it trading, right? So did we have this massive news and then we're seeing really very volatile trading on the open? Now, I can't teach you fast and slow, right? There's no matter how many times somebody says, is it fast or is it slow? It's just experiential, right? I can tell you the way it's trading makes a big difference. You can't shortcut experience, like the amount of depth displayed, how many contracts does it take to move through each level? Is it sweeping through lots of levels at a time? All of that stuff is experience-based. And after a while of just watching it, you will notice when an open is particularly slow or fast, for example, right? So that's just something your subconscious mind has to learn. Then things like sudden changes. Has the market suddenly started doing something completely different, right? And you take a step back. What does that mean? Maybe you haven't seen the news or whatever. So all of that stuff there is 100% discretionary. It's all experiential. You can't tell if today's open is fast unless you've watched plenty of opens, right? You can't start to envisage how hitting these big news will hit the markets unless you've seen big news hitting the markets and taken notice of it. So what this stuff does, it helps you paint a picture of how the markets are playing out, both in terms of what could be driving activity and actually confirming if it is driving that activity. So like, the news and recent activity says this is what we're probably going to do, but how it's trading is where you confirm it. Is it really volatile? Is it really slow? Right? So, seeing a big day overnight and then seeing the market open really slowly at 9:30 a.m. Eastern, that's the difference between recent activity and how it's trading, right? So you're just trying to paint a picture both in terms of what could be driving activity and then is it really? And then in turn, that's going to help you decide what kind of plays to take. Now, I kind of hesitate to use the word setup because it kind of feels so rigid and a bit one-ruley, but let's kind of go there. It helps you decide which setups you should use. Helps you decide to go all in or scaling. Helps you decide if you might be better off not trading for the day. There are really slow days where there's just not much opportunity and you might have a couple of punts and just stop. Now, most home traders, they can look at this, agree with it, it makes sense, but when they implement it, they kind of go through the motions, but don't really bring it back into their trading. They kind of see, they absorb, and then they say, I'm going to fade all absorption. Back to the one rule trading system that's applied in all trading conditions. So there's a disconnect between these elements and the execution, right? Now, who remembers the eggs? We actually have this in Thailand. This is like, they do barbecued eggs. And I don't know how to make them, but they're barbecued eggs, but they're not like, they're kind of mixed up already inside. I think they take the egg out, put pepper and stuff inside, put the egg back in the shell and then barbecue it. Absolutely fantastic. Look just like this. They're making me hungry. So let's look at an actual setup. So what this setup is one we did from the 7 Setups webinar. It's a pullback to a step in the intraday profile, right? It's a trade that you take generally in a market that's moving up overall, that then stops for a short while and it builds volume in area. So it's moving up and it stops and builds volume in an area, right? An observation tells us that when a market moves up, it's going to move and then it's going to pause and build some volume, maybe just a few minutes, and then it moves on again. Then it builds volume and for a few minutes and so on. It's a pattern. It's a pattern that occurs. S&P futures in particular has a good tendency to have this pattern, but also to pull back to the area of the last high volume node before it moves on. So it'll move up, it'll build volume in an area, it'll push out, and then it'll fall back. It's not always going to fall back right to here, but it falls back to that area before moving on. It doesn't do it every time, right? Does it enough where you can capitalize on it. It's a pattern. That's where a pattern is in the market, right? So recognizing that patterns like that is a big part of being a trader, right? It's a simple layout. So where does discretion come into it? So first, it's part of discretion. So I think the rules are fairly simple. We wait for the high volume node, we let it leave, and we want to see it come back towards the high volume node. That's a setup, right? Yes, somebody says just a short step away from balut. That is disgusting stuff. For those that don't know, balut, it's a fertilized chicken egg that is soft boiled, which has got like a baby chick fetus in it. It's Merv, it's up your street. That's one of the few things I've never eaten. Anyway, so if we take this trade, it is a fairly simple trade, but it's not shooting from the hip. Right, it's absolutely not shooting from the. It's very, very clear whether this setup's on or not. Right, absolutely crystal clear. Right, but it's a discretionary setup because I'm not going to take it every time. I'm going to take it and adjust it at my discretion. So, first part of discretion is the trade on or not? So if it's a low energy, low participation day, they're not good for this setup, right? But also really extremely volatile news-driven days are also not very good. Because on a really big news-driven day, you might get this bit of volume here, but it might blast through here before taking off. So it doesn't really stop in the same places. It's like a difference between having a walk and trying to run on ice. It just slips and slides through prices. So, like the days, we had the Iran bombs on the Saudi refineries. The days following that were really wild, right? And you couldn't do that in those days. Second, you got to recognize the market is moving up and has taken a breather to build some volume. So if that breather is 2 hours and 300,000 contracts over a 15-tick range, that's not what we're looking for, right? So the size of this volume node is also discretionary. It shouldn't be too big, and it shouldn't stay there too long. Now you could say, well, how many seconds is too long? If it's like 7.5 minutes, it's okay, but if it's 8.25 minutes, it's not. It doesn't work like that, does it? It's like, you have to watch and say, oh, it hasn't been there too long, and so when we break, we're going to take a trade. But if it's been there for a couple of hours, it's just not that kind of high volume node that we're looking for, right? We can probably say not many people still think the market's moving up, whereas if we've moved up here and it spends 4 or 5 minutes here and it's like 20, 30, 40, 50,000 contracts, 5 minutes maybe, and then it moves out from the top. Yeah, I think that's a good case for this trade. Okay, so if you're too keen to trade, you'll simply make the current market fit the setup and take anything that looks remotely like it. Then third, how much leeway do you give the trade? How close do you need to be to the top of this volume area? Because you want to get a good price on a trade if you can, right? But how far maybe do you want to let it move through before you decide it's not working? Well, obviously the more volatile the market is, it's going to be a little more slippery. You can't say, well, I'm just going to only let it touch the top, and if it goes through a tick, I'm going to scratch a trade. So with a bit more volatility or a faster market like the Dow or the Nasdaq or crude, it's going to be a bit more slippery. So maybe you'll be there looking at a trade and you'll say, well, it's a bit slippery. Maybe I'll just scale in. Maybe just go with one contract first and then add as it goes my way, because I'm not sure about it. Then how does it react after you get in? Does it barely move? So if you watch the S&P and you get into positions on the S&P, I'm not talking about COVID volatility kind of days, but like you get into a position on the S&P and the thing only lifts up 3 ticks and keeps coming back, and then lifts up 4 ticks and comes back, and then lifts up 2 ticks and comes back, and it's just not popping. That's just a trade you shouldn't stay in, right? That's the S&P telegraphing to you that there's no real participation on your side. But we'll sit in trades that are doing that and not get out. So typically on like kind of low opportunity days, you see really poor follow through on your trade. So, and if you see it on 3 or 4 trades, you're probably better off staying out. But if you see it on one particular trade, maybe it's just like you might be 2 or 3 ticks on side, but at your discretion right now, you're going to get out because you're really not feeling it, right? And then there's things like correlated markets. Are they with you or are they against you? So within this single setup, you can fine tune the way you play it, the way you manage risk, the way you confirm it's going your way, the way you confirm it's not going your way, the things you need to see to stay in both on your market, the things you need to see in your market to stay in, and the things you need to see in supporting markets. And then there's information you can use from this trade using the next trade, like especially the way it follows through. And to me, that is the discretionary part. The setup itself is still looking for a pullback to a step in the volume profile, right? In a market that's moving up overall, but you're not going to take every setup. You're not expecting the same confirmations each time. You're going to adjust your volatility. You let each trade give you feedback on how it's following through. You're absolutely not hinging the market just because you've got a gut feel it's going up without any rules. And you're also not trading a one rule system. You are looking for things to line up in your favor. Now, none of this fine tuning would be possible without having a subconscious mind at your disposal to kind of process all the data. You can't set up 50 hard rules that you process in the conscious mind to do all this tuning, because it doesn't seem to be that good at multitasking. And that's what the subconscious is for, right? Let it learn, put in a feedback loop with reviews that give it the information it needs. Does that make sense? Right, now let's talk about a need or a use for pure gut feel that we should mention. Sometimes you feel that a perfectly good setup shouldn't be taken, right? It's there, there is nothing you consciously see that indicates it won't work out, but you've got a gut feel telling you not to take the trade. And to me, that is a much better or more acceptable use of gut feel than just getting into the market based on gut. Like to keep you out of a trade because you don't feel comfortable taking it this time round. Now, you've probably all seen this as well. It is a skill. We're trying to develop a skill, right? Now, for a new trader, this whole thing is really daunting because of just the amount of different things that you got to look at. And in the prop firms, what they do start interns with a narrow range of trades and a feedback loop, right? So after learning a technique, you're going to be a novice, and there's nothing that you can buy today and profit from tomorrow. that I've ever seen, right? So if you keep moving from one technique to another because you don't have the patience to become better at something, or you don't want to do what it takes in terms of reviews, you will just remain a novice forever. Now, execution, obviously, so we got the learn part, right? Execution is obviously a very important part of your development as a trader, but it's not going to get you moving forward on its own, right? Because there's just too much on your mind in the moment as a trader. You do need to obviously collect information for your reviews, whether you do that by videoing your trades. I know that in the prop firms, a lot of them video all the trades and watch your videos again. But you need to collect the information, because there's no point just looking at a screenshot at the end of the day of where you got in and where you got out, right? So we do, obviously, we've got Journalytics app that helps you put in like richer information about your trades, because you can review it. And then you do the review with a bit that nobody wants to do. You look at your execution, you look at what mistakes are you making, are you closing trades too early, all these different things, and you get that, and you're just basically feeding it into your subconscious, right? As much as, like with closing trades too early, it's a good one. As much as you can try and consciously stop closing trades too early, it's just a matter of just recognizing when you do it and telling yourself you need to get better, but letting your subconscious mind do it. So you're constantly teaching your subconscious mind to hone the discretionary skills you're going to use in trading, and you're observing and being mindful of your mistakes, right? Now that we've got some idea of the benefits of discretion, let's just loop back to what people feel discretionary trading is, which is this kind of instinctive trading. And what are the potential issues with literally just shooting from the hip, right? Just saying, when I think it's going to go up, I'm going to buy, right? One of the first issues, it's like driving. I mean, when you drive, every time you get into that car and you're driving lessons, you're driving the same car, you're doing the same thing over and over again. The instinctive trading is the opposite of that. It is inconsistent. Every trade is so different. You're not building that feedback loop. You're not teaching your mind anything about trading. Every trade is different. You're not really repeating anything consistently, right? So you're not going to really build a skill doing that. You're not going to know particularly which things that you're doing are working for you and which aren't, if you keep doing a different thing every day. And that's one of the biggest dangers of this kind of instinctive gut feel trading, is that you can't develop a skill. It's like, I want to be good at a sport, so I'm going to learn tennis one week, I'm going to learn cricket the next week, I'm going to do javelin the week after that, I'm going to do high jump the week after that. You're never going to get good at anything, because you're doing a different thing each time, right? The other thing about instinctive trading tends to be very much driven by fear of missing out, watching a market move against you and not being in. And then that feeling kind of we've all had this, it kind of builds inside you. It's like a glowing feeling in the middle of your chest that just kind of spreads, and it's almost making you explode, that you're missing out on all this action. And then you finally get in and the market turns around and goes the other way, right? And that's so you have to kind of take that out of the equation by having some setups, right? Some plays that you take. The other thing about pure instinctive trading, it's got no brakes, man. It's got no brakes, right? You can do anything, right? Including revenge trading. And that just usually ends as with somebody blowing up their account. Because there's no brakes, there's no setups, there's nothing stopping you from doing anything. So you can really behave badly. So if you're trading like pure instinctively and you think that's discretionary trading, you got to ask yourself, where are the brakes, right? And who doesn't love some revenge trading, Condon says. Right, discretionary trading. Right, so let's go back to this. It's not about taking random punts at the market because you feel it's going to do something. It can't be, right? It's about having some rules, but the flexibility to make nuanced adjustments in real time, right? Axia have got some amazing... the good thing about Axia is that the way they mentor their traders and the way they teach them both pattern recognition as well as... pattern recognition, they teach them some setups, they teach them how to recognize patterns. And so you're always, as long as you're trying to hone your pattern recognition skill, guess what? You're going to get better at that too. But they don't really try and push you into that from the start, because I know you kind of got to get on your feet. But, you have rule base, you're looking for patterns, you're looking for behaviors that are repeating themselves and that you can see they're repeating themselves in enough time that you can actually make some money out of them. That's what a setup is, really. It's about a behavior that you're looking for that you can see in time to make some money out of it. The rules, those kind of rules, are basically protecting you from yourself. So that pattern, that setup, that's kind of giving you some structure to work around, right? If you don't give yourself some structure to work around, you're just not gonna. It's not teaching the brain anything, right? Some of the adjustments you make, they're going to be made because, you know what, man, this looks really wild today. It's going to be completely intangible, relayed from your subconscious mind, based on repetition of watching the markets and understanding what the influences are. But it presents a new problem for the new trader because it's a lot to take on board right from the start. And most people want to be profitable right from the start, right? Which is why people are out there selling instant gratification systems. So most people, what they do when they see this, they ignore it and just go back to the one rule trading system, right? Now, if we compare this to mechanical trading, because people think discretionary trading and mechanical trading, they're kind of the only two alternatives. It's based on a fixed set of rules following technical aspects of historical trade data, usually price, indicators, that kind of thing. And the allure of the mechanical trading is that it protects you from doing dumb things like moving stops or revenge trading. It's very simple, but it does ignore the fact that the markets just aren't that simple. So even with the best mechanical system in the world, you're still going to need to know when to turn it on or off, right? There isn't one you can turn on all the time. So markets are sometimes like more technical. Like you might have a market that's day trading nicely, it's just going up or down, and it's really nice trading conditions. And then you've got markets that are reacting to stuff like news, interest rates, trade agreements, wars, pandemics, economic conditions. And it's very difficult to not take that into account, or to think that everything's just factored into price. When, my worst ever trade was Angela Merkel said something about Europe way before Brexit, this was, and I was long on the bund, and I was like 20 ticks in profit. The market went down and slipped 12 ticks past my stop. It moved. I've never seen something move so fast. And so mechanical trading, right? Even if you do that, you're still gonna have to know when to turn it on and off, right? You won't find anything mechanical that can just be used all the time. And then the end game, right? Where is it you're gonna end up? Because one of the things that we've been talking about is treating it as a skill and teaching your subconscious mind that skill. And with any skill, right, like driving or tennis or whatever we talked about, you should end up on autopilot, right? That's how you do everything that you've learned as a skill. But you just can't get there on day one. Now, let's have a look at this. Does anybody recognize this? You might recognize it because you've done James Dalton. You might, everybody's asleep. There you go, I've got an answer. Right, so this is from a psychologist called Noel Birch, right? And so this has been around since the early 70s. It's a psychologist. James Dalton, the guy who did the market profile stuff, he uses it a lot. And so there's they have 4 stages of skills development. The first is unconscious incompetence, which means you're useless and you don't even know that you're useless, right? So you don't even know it's a skill. And that's where a lot of people come into trading, right? They actually don't even know it's a skill. So they don't even know how bad they are. Then after a while, you get the conscious incompetence. Like, you're aware of the skill, but you're still useless, right? Some of the comments here, that's what my wife says about me. Then you've got the conscious competence, right? So that's when you're actually executing, but you're doing it consciously. It's taking a lot of effort. It's like when you first learn to drive, you're doing it, but my God, it feels like juggling. And then you get the unconscious competence where it's just automatic, right? And that's where you're looking to get to. So even though it's not shooting from the hip, basically where you get to is you can do it all without really thinking about it, right? And that's not new to trading. Let me just go back to that. Right there. Okay, I actually had another one, but it's gone underneath. Okay, I wonder if I can move that. No, I had another slide that showed the same thing. Let me see if I can find the image. 2 seconds. No, I haven't got the image either. Okay, but there's a lot of different. If you look at like competency, there's a lot of different ways of basically saying the same thing that the way people learn. So the irony is, even though you have to avoid any sort of instinctive trading as you develop, where you're going to end up, it's going to look a lot like instinctive trading, right? But it's just the fact you've programmed your autopilot, you've programmed your subconscious. Doesn't mean you'll only know and be able to execute one setup, right? So it's not like you're going to be unconsciously competent in one setup and learn another setup and be back here, right? So, you know, you're going to be, your ability to spot patterns in the market, implement new setups based on them, pick up new setups from other people, that's going to improve too. Trading more size, not being freaked out by the size, scaling in, taking more opportunities, that will all come as you become better. But you can't skip this process. If you're going to trade discretionary, you can't cut this out. You can't forget the way we learn. You can't think trading is different. You can't say, I don't want trading to be like that, right? I just want to learn it today and start using it tomorrow, because you just can't, you can't dictate that to the markets. And that's what a lot of people do, is right, they're trying to get this thing going faster, and by trying to kind of speed up the process of learning, they're bypassing the way that we learn stuff, right? So, you know, by all means, look at the video, go through this. If you don't believe this stuff about the way we learn, I think that's fine, because it's not, what you've seen today isn't really my opinion. It is what I've read and I believe, and it's not so much my opinion, but it is my belief. And you're free to not believe it, right? You're free to take your own path. But what I would say is, if you think this might be actually the way we learn, and some of the evidence we provided today that backs it up might bear out some truth, go and learn about how the brain works. I mean, have any of you here studied this on your own before, just because you're curious, or you picked up a book in a bookstore that was about the way the brain works? Any of you done stuff like that? Okay, so the guys that have, does this match what you've learned in any way? Yeah, it is fascinating, Jason, right? Yeah, dual passions, the mind and trading. Cheated on my psych exam, got a B+. Yeah, and we've got Mark's a therapist. So Mark, does this line? I mean, I'm way underqualified to talk about this with Mark here as a therapist. Mark, does this line up with the way the brain works? Am I quite far out, or is it roughly in line? Mark, okay, that's good. Yeah, it's like learning music, right? Language. It's like learning anything. Yeah, I mean, that's the interesting thing, and maybe Mark can comment on this. Heidi's saying she's learnt the incorrect stuff. How do we clear out and install the correct stuff? I mean, Mark, have you got any comments on that? How to kind of, if you've gone down the wrong path, how to kind of clear that out? I know a lot of the prop firms, they prefer people without trading experience because there's not so much to unlearn. But I think they also like people from college because they're cheaper as well. But it is an interesting thought. Let's see if Mark comes up with something. Any other comments on this? Well, John, in relation to Jigsaw, I mean, Jigsaw is all about, it's an order flow reading tool, right? So at Jigsaw, we teach a number of things. We've got tools for reading order flow. We've got tools for reviewing your trades. There's not a coincidence that we have education, execution. Let's just go back, right? It's not a coincidence that we've got education, execution, that we collect your trades and we give you a platform for review, right? So a lot of people come to us because they're only interested in this part, or they're only interested in this part. They don't use the whole thing, but that's fine. But that's the reason these things exist, right? Now with order flow is a very kind of touchy-feely thing, and things like seeing that the market is a lot faster one day than another, that's what order flow is all about, right? And you can have, Mark, do you want to talk? I can probably give you the mic, I believe. See if Mark wants to talk. Mark, do you want to talk? You're not shy, are you? Oh, his wife's sleeping. Okay, that's what a wise man. Yeah, that's either because he doesn't want to wake her up or she snores. I'm not sure which it is. Yeah, this will be available online. Yeah, I think things like cutting losses is a big problem, and I think most from what I've heard, in the prop firms, cutting losses is a big problem. Letting losers run, cutting winners short, and it's just a matter of working through it. But I think the working through it is doing it, reviewing it, doing it, reviewing it. I don't think there's like a firm action you can take except kind of ironing the wrinkles away. And the other issue they have as well is that when they first go live, they might have a certain result on sim. First go live, the results always go down, and then they might get like 2 or 3 contracts as a very new with their first live account. They might go 2 or 3 contracts or 5 contracts, and then they give them 20, the results go down, and then they go to 15, the results go down, and every time they scale up, the results go down. It's just bringing on another factor that you need to kind of get used to. Now, TJ is saying, isn't the biggest problem wanting to be right? It is for a lot of people, but I think different people have different issues that they have to work through. Yeah, I mean, Norseman's saying it's easy for me to get focused on the P&L and leave the process of gaining in skill behind. Reining in dollar expectations and focus on building skill. I think there's a lot of people that say, if I'm looking at my P&L, I can't trade as well. And to that I say, that's just another issue you need to iron out. If you're trading worse because you can see your P&L, that's an issue you've got. You're letting something interfere with your trading. I just think that's something you need to iron out. Yeah, Heidi, there's no epiphany. It's just slog. It's just like another skill. And oh, thank you, Con. Some nice comments. I'm not going to read out compliments because it makes me. People think I just want them for the recording. Let's just go up. Yeah, I mean, technical analysis. I think Adrian's saying that technical analysis is a flaw, and I think the problem with technical analysis, leaving aside the arguments of whether it works or whether it doesn't, right? I think the flaw is the promise that it makes. That it makes these promises that you're going to see this kind of mechanical setup that you're going to be able to take every time. So if you go back to like the early books probably from the 50s now, 60s, they all talk about these setups as if like, this line crosses this line, you go long, and it crosses the other line and you go short. And I think it's that kind of belief set that's the damaging thing with technical analysis. And I just think it just, people, I put this to Reddit the other day. People talk about support and resistance, and they talk about the best way to find support and resistance. What's the best way to find it? They never ask, does it exist? Right? Nobody says, does support and resistance exist? Is the concept valid? People just ask about how to find it. So I think we have like these beliefs about trading that are so ingrained and built in that we never question them, even though they might not be right? And even though they might not be confirmed, and that is an issue as well, because, you don't have beliefs that are incorrect. Neil, I feel like I'm good at discretion to determine context, so I can't overcome my urge to fade everything, whether appropriate or not. Well, I think, again, Neil, it is a subconscious thing, possibly. But the problem is, it's what I just said, support and resistance, right? Everybody is looking at the best way to find support and resistance. It's drummed in everywhere you read, right? You read that people aren't talking about whether trying to sell the high or buy the low of the day is valid. They just talk about different approaches to do it. So, if you're so there are lots of traders that have got real skill, and that skill is understanding which direction the market's going in, to set in a directional bias. But they use it to try so they'll sit there watching the market go up, and they're waiting and they're waiting, they're watching the market go up, wait, up, wait, up, and they're watching it and they know it's going up. There's no question in their minds it's going up, but they're waiting for a sign to tell them it's about to go down, right? Because that's just what's been drummed into them that trading is. You know, if it's buying up and it's obviously buying up, then buy it. Sorry, if it's going up and it's obviously going up, buy it, right? That's it. If you can just buy when it's going up. So Neil, you just have to, what you're going to have to do is start practicing and consciously practicing buying when it's going up and selling when it's going down, right? You're going to have to go back to the conscious, right? You're going to have to go back to this, right? You're going to have to go back to the effort of it, and I think that's probably quite achievable. Yeah, reading the tape is real analysis, William. I mean, reading the tape, that's a great way to get a handle on how people are trading, how fast is it, how slow it is. But it's all experiential, right? The tape will only make sense after you've been watching it a couple of months, and after you've got that experience of you know, what's fast and what's slow. Yeah, trading what you see is more important than trading what you expect. Absolutely. Do charts help to give you a clue about context? Yeah, I'm not really anti-charts, to be honest. I just think people just read too much into them. I mean, you know, people worry about time frames and stuff like that. So for me, a chart should be, because I'm trading in the morning session, when I start, I want the chart to show me the past couple of hours, and I also want to get to lunchtime and still see most of the morning session, because that's kind of what it's done today. And of course, man, if it's just going up vertically, I think it's great. I also think charts are a great way to look at correlations, are a much kind of easier to read correlations from some low low time frame charts. Mark, I will contract you, and somebody, Natalie, said it's taken me years to get rid of TA, and yeah, because everybody says it works, right, on the internet. Yeah, it's experience. Like Mervyn said, it's experience. Let's just try and run through the rest. I think we're pretty much done. Combination of day trading and journalistics has changed everything. Thank you, James. Yeah, I mean, you could say TA has evolved a lot, but like again, the problem with technical analysis, Raj, it is looking at effect. Everything you see on a chart is the effect of trading, but what we actually trade is the cause. So you know, it's like it's what, you know, trading into stops. You can see stops in a lot of different ways. You can't see them in a MACD or that traditional technical analysis, but like you can kind of get where the stops are from a volume profile, from a chart, from the depth of market, and you know that when that breaks, that there's going to, you know, when a range breaks, there's going to be stops. Whether there are stops, you're probably going to need order flow to see that. But I agree, there's not just one way to do everything. Yeah, somebody's saying in Axia they're using both DOM and charts. Different people use different things at Axia. Demetrius has got like a few long-term charts, but intraday he only uses DOM. Then you got Barrett, he uses footprint charts a lot. He doesn't use DOM so much. You know, they're quite happy with whatever their trades are doing as long as they're making money. Right, what I'm going to do is we're still getting lots and lots and lots of comments. Will we add footprints? We've already got footprints done. Condon, sorry. What we're going to do is I've got some QA people. I've had to hire more QA people. We grew the development team and now QA can't keep up. So we should start the final QA and the charts with the next couple of weeks. Well, actually this week. And then we should have something next month for a beta, finally. So footprints are in there, market profile are in there, a whole bunch of stuff. We had to really take a step back and look at performance because we don't want to do anything that's slowed everything down. And what we'll say, if there's no more questions, which I think we were mostly comments, I'm going to close this out. I will pop the recording up. It is recorded. If you're playing tennis, try not to think about all those calculations too much. It might just ruin your game. And thank you for joining the discussion, and thank you for turning up, and I'll speak to you next time. Thanks.